But there's two pieces of this information I want to focus on. On the M&A side, these were not necessarily private equity firms that were surveyed. These are companies, and so when we look at companies, it's not or an individual company, an entity, or owners. It's not surprising that it would have the types of numbers showing up, merging 8%, 5%, 6%, considering some type of transaction, while 75% and the 10% that don't know, or 85%, kind of in the nothing at all category. And what we've seen is there are two pieces of that. For those companies that are interested in M&A activity as a strategy, whether buy side or sell side, there is a lot of activity and a tremendous amount of activity. In the fourth quarter last year, our transaction advisory services group had a board of deals and things going on last November, December that's carried into January, February, and that has never been stronger. It's one of our best indicators of what we see up close and personal with clients and people in the market as to what's going on, and their board is absolutely full, and that's a good thing. It does show some sign of optimism, but likewise, I'll say there's some pent-up demand in companies that either planned to go to market in 2020 and they were going to go in the late second quarter, third and fourth quarter, and clients of ours that delayed and said we're going to wait till 21. There's a few reasons for that. One, from a risk perspective, some of the financing, the banks and the private equity groups may or may not know how they want to price in the risk in the capital markets and the availability of capital. The other piece is, if you're selling a good business and it looks to be somewhat either down or tainted a little by COVID and the pandemic, there's no reason to go to market unless you have to. And so wait for those results to come back and go to market at a better time. So those are a couple of things I want to point out, but the focus of this slide is on those companies that would either be acquiring themselves in an acquisition mode, who may have hit the brakes, or those who may be consider being acquired or enter into a sale transaction. And then last, the high growth company factor comes into play again. You can see with this slide that 13% are merging with another company or being acquired or selling. All three of those categories, a high growth company is about 2 times more likely, even though the numbers are low and the percentages are low. When you spread those out, they're 2 times more likely in almost every category, sometimes more than that, to be involved in a transaction or consider a transaction, whether buying or selling. So obviously the growth companies have more going on. That's not a secret. But still, where there's no growth, the spigots aren't completely turned off and people haven't buried their head. People are listening. We see equity firms out there routinely calling on our clients and speaking with them, whether they're strategic buyers or financial. Everyone that's not in a deal or having something teed up is trolling the market and looking on a regular basis and waiting for the right day. So activity is still high, and that's something to keep in mind and watch as we go into 2021.